Sandy Botkins is a CPA and attorney, as well as a former trainer of IRS attorneys, who now spends his time helping people maximize their tax benefits. In today's clip, he explains that there are two tax systems in the United States, one for employees and one for business owners, and why being a business owner gives you a huge financial advantage in life. Here's Sandy.
Why most Americans overpay their taxes to the tune of thousands. There are three major myths that's creating this. Myth number one is, well, I only made $50,000 or $30,000 a year. Why do I need to know about taxes? Because if what I say generates a loss in your business, and we're assuming it's a bona fide business, that loss can be used against any form of income you have. Interest, dividends, wages, rents, anything. If the loss exceeds your income, you can carry back all business losses 2 years and get a refund from the federal and state government for the last 2 years of taxes that you pay, or carry forward all business losses, get this, 20 years, and offset the next 20 years of earnings. So you never lose a properly documented business deduction, as long as you run your business like a business. But there's a bigger myth than that, and that myth is that my accountant takes care of my taxes, or my spouse takes care of my taxes. Nothing can be further from the truth. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the fattening foods we want, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? My favorite myth is my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth. In fact, Jaguars are the only cars made in the world that have more vertical mileage than horizontal. It is very critical that you get your tax affairs in order. Now, the case study on this, which really emphasized this point, involved a study in 1994 by Jane Bryan Quinn, who's a nationally syndicated columnist. And she did a study of a couple who made $40,000 a year. Now, $40,000 didn't go far enough, so the husband said, honey, you got to go out and get a job. And she did. And she made an extra $18,000. A year later, they saw no difference in their bank account. Why is that? Well, this slide will show exactly what the problem is. On that $18,000, they have $5,660 of federal and state income tax, most of which is non-deductible. Well, this slide will show exactly what the problem is. On that $18,000, they have $5,660 of federal and state income tax, most of which is non-deductible. On that $18,000, they have to pay Social Security of 7.65%, or $1,377. And as visual proof, look at your paycheck. That's exactly what it is. They then have car expenses. We assume they commute 10 miles a day, round trip, very conservative. At the IRS 37.5 cents a mile rate, that's $975 of commuting, which is non-deductible. They then have child care of $100 a week for 3 kids. I'm not quite sure where you get child care for $100 a week. You get a little bit of a tax credit, but basically that's $85 a week net of that credit, which is $4,400 a year of non-deductible child care. And I'm making this specific so you see why in a minute. Then you have lunches at work. Don't you have lunches with colleagues? We assume they spend $6 a day, 5 days a week. So that's $30 a week, 50 weeks a year of non-deductible lunches. Then better clothing. You know, when you're working, you have better dry cleaning, more clothing. That's at least $1,200 more of upkeep. And finally, since both couples are working, do you think they want to cook? No, they want to eat out more. And their eating out costs have gone up by $1,600. By the time you take your non-deductible federal and state income tax, non-deductible child care, non-deductible Social Security increase in food costs and clothing, you're left with $1,268 a year on $18,000. Now let me put that in perspective. That's $100 a month to put up with 2,000 hours of work, and to put up with a commute, and to put up with a boss that is spelled backwards, double SOB. The reason is that we have two tax systems in this country. And a lot of people think, sure, one for rich, one for poor. No, there's one for employees, which is designed to take your wealth, and you're taxed on $1. And then there's one for self-employed individuals, which are taxed on your net. This is after you take all your deductions, which is designed to create economic growth. In fact, small business generates over 70% of the job growth in this country. It's not IBM, it's not United, it's small business. People like you and I. So when lobbyists come to Washington, D.C. to get some good tax laws, and there are good tax laws, that's the important point, they can get what they want because they know they're the economic engine behind this economy. The key is you've got to have the knowledge. You've got to know what you're doing, because if you don't know, you can't take the deductions.
That's it for today. Tomorrow we'll discuss why you are either sabotaging your success or on a consistent path toward creating your dream life. We'll see you tomorrow.